itself. This is the special offering, that Insight Edge, where we talk about the Titan earnings. Now, the earnings were a disappointment. Yes, we do know that, on an operational basis, there was weakness, which was led by the weakness that we saw in both their jewelry business as well as the watches business, for which the company did give, some color as well. For the jewelry business, it was volatility in gold prices as well as, competition that they've seen from both newer players and existing players expanding in newer geographies that has impacted their margins. At the same time, if you look at, the 1 lakh, less than 1 lakh rupee category, which is daily wear jewelry, that too has seen a fair amount of intensity, for which Titan has their own plans. They have Carrot Lane, they have Mia, as well as a Tanishq affordable range coming in. They're keeping a close watch on the development of lab-grown diamonds going forward as well. So that will be an important, imponderable to watch out for going forward. But what really stood out for me was that maybe we're done with swift margin expansion for at least the next couple of years, given competitive intensity. The management told CNBC-TV18 that while they're guiding for jewelry margins to be between 12 to 13%, they're more likely to be 12% for the next couple of years than 13%. So that center of gravity has shifted towards 12%. Even the studded ratio, they maintain at current levels. That implies that people are looking at plain gold jewelry or gold coins itself, which aren't very margin accretive given the volatility that we've seen in gold prices. People are seeing safety in plain gold as against, gold for adornment, etc. And on a high base, Titan will obviously grow slightly lower than some of its recently listed peers, which are growing on a smaller base. So maybe that headroom of growth as well for Titan is limited as compared to others, and that explains the sort of cut that we're seeing in the stock price today. But make no mistake, the pedigree of the company, unquestionable, and they're also gunning for 10% market share versus 7% that they have right now.
Okay, all right. So that's the Insight Edge that Mangalam has provided on Titan. But earlier today, we did speak to Ashok Santalia, who's the CFO of the company. Listen in to excerpts from that conversation.
As far as jewelry margin is concerned, yes, two factors: gold price volatility and actually spiking a lot during the year, almost 18 to 20% as of now. Gold prices have gone up, and the competitive intensity that we talked about. The existing jewelers are expanding aggressively. Many new players are coming in, and a lot of retail capacity has got created. And I'm sure demand, because of the gold price volatility, also is slightly slower to catch up. And whenever gold prices are volatile, consumer sentiment do get a bit beating till it stabilizes. So both these factors, I think, contributed. We wanted to prioritize our market gain share, the acquisition of new customers, over margin, and a lot of consumer offers and gold exchange programs were there during the quarter, which took some beating on the margin. Addressing this artificial or lab-grown diamond phenomena, we have been keeping a close watch. If you look at globally, in US bridal engagement ring segment, lab-grown diamond have made a meaningful entry and substitution to natural diamond. But if you look at other geographies like China or Europe, I think these diamonds still have not got much traction. As far as India is concerned, yes, some of the new players have entered into, some of the new brands have started getting into this segment. And the large caratage diamond, where the price advantage comes meaningfully, which includes solitaire, and that continued to be so. There we saw some slowdown in our growth. But as far as the small diamonds are concerned, they are okay. As far as margin is concerned, I do expect that this competitive intensity would stay for 12 to 18 months for sure, before some of the weaker players or some of the other players from where we are gaining the market share either exit or become further weak. 12 to 13%, I believe going forward, margin is going to gravitate more towards 12%. So the center of gravity is about 12% for next 1 to 2 years.
All right, so the street's taking note of what the management has to say with regards to margin in particular. No concerns about growth, but the concerns are competitive intensity and margins. So that's something that, will cause the analysts to perhaps revise their estimates going forward on Titan itself. But on the